morning. Welcome to First Mover, your first global look at today's action in the Bitcoin, blockchain, and digital asset space. I'm your host, Christine Lee, and joining me are my co-hosts, CoinDesk Managing Editor of Global Capital Markets, Lawrence Lewitinn, as well as Managing Director of International Content, Emily Parker. Good morning. I hope you had a restful weekend, you two.
I did not.
You did not.
You did say that, despite that cryptocurrency drama.
Maybe some people over the weekend did not sleep so well. So let's take a look at Bitcoin. Over the weekend, we did see the price of Bitcoin fall $8,000 to a 3-week low within 15 minutes. The XBX Bitcoin price right now, though, recovering a little bit. It's up over the past 24 hours, about 3%, now trading just above $56,600. And the ETX Ether price right now trading at 22.28. ETH is up about 6% over the past 24 hours, according to Trade Block data, the most reliable reference price for institutions since 2014, with billions in assets under management benchmarked against it. So looking at our top stories, Lawrence, we did see a major pullback in the markets, and there's a lot of theories about why this happened. Yeah. Take us through them.
Okay, first of all, this is a thin market. Let's remember that about Bitcoin. Despite all the headlines, despite everything we hear about it, it's still a very thin market. Eat a sandwich, guys. You're too thin of a market. There was a series of power outages in China because of lower hash rates. It caused lower hash rates because of the power outage. There was an accident at a mine, and so the Chinese authorities wanted to get it to the bottom of it, and it happens fairly frequently. But it seems like a whale based in China, it seems, sold allegedly about 9,000 Bitcoin. That's the rumor that's been circulating. That triggered a sell-off, and that triggered more selling in the market, and it triggered all sorts of liquidations of perpetual futures. And, of course, somebody had to tweet out an unfounded claim, at least, that the Treasury was going to charge several financial institutions with money laundering. And left it at that, the U.S. Treasury, and that just added to FUD, fear, uncertainty, and doubt, and that brought the market down a bit. But look, hey, it's back up. It's not where it was. It's not where it was Friday, but it's better than what it was a couple of weeks ago.
Yeah, there was that rumor that the hash rate Bitcoin on the Bitcoin network went down. The hash rate refers to the total combined computational power that is being used to mine and process transactions on the Bitcoin proof of work blockchain, and that also, may have set off bots or whatever to cause that crash. But one silver lining is, despite the crypto markets crashing, we saw Doge skyrocketing over the weekend. Nothing can stop.
We have Emily here.
Good boy. Emily, what happened with Doge?
I mean, who knows whatever's happening with Doge, but yeah, it hit about 50 billion in terms of market cap. And it all started with Slim Jim, as our colleague Danny Nelson called it, social media's favorite meat stick, mentioning Doge in an earnings call and basically setting off this meme frenzy. So Doge now has stabilized a bit, but who knows what will happen.
Yeah, according to CoinDesk data, Doge up 33% over the past 24 hours. It's trading at about 40 cents. I mean, just in December, it was less than a penny. All right, checking in with our CoinDesk Global Policy and Regulation Managing Editor, Nick Day, with some of these rumors going on. He's also the editor of CoinDesk, the State of Crypto newsletter. Hello, Nick. How are you?
Hey, good morning. How's it going?
It's going great. All right, Nick. So there are some rumors going on, possible that the U.S. regulatory crackdown is contributing to the crypto market's plunge. What can you tell us about that?
Yeah, so I spent a good chunk of yesterday sorting through these rumors. They really exploded onto Twitter on Saturday night. And from what I've been able to discover, here's what seems to have happened. On Friday, Charles Gasparino at Fox Business reported that incoming SEC chair Gary Gensler was waiting on Janet Yellen to finish reviewing cryptocurrencies before, making any plans. On Saturday, this appears to have morphed into some, Twitter accounts that have really high follower counts, tweeting in all caps that the U.S. Treasury Department was going to charge financial institutions for money laundering using crypto. As you can see, there's a bit of a gap between, what was reported originally and what was tweeted out. So I was looking into this. I spoke to two individuals that I consider to be reliable, and neither of them have any knowledge of any forthcoming, enforcement action. One of them pointed out that, upcoming enforcement actions would take months, if not years, to plan. It wouldn't be happening very quickly. So, if there is something in the pipe, it likely would not be happening, less than 3 months after Janet Yellen took office, and certainly not within weeks of Gary Gensler taking office, if they're the ones that are spearheading this. What is possible is that, one entity or another might have gotten a subpoena and, hinted that there is a broader crackdown coming rather than just, to that one entity. But yeah, as far as I can tell, and as far as the people I've spoken to can tell, there's no imminent, money laundering allegations coming just yet.
Nick, is this the dumbest game of telephone, or was it that at the very least, I mean, as you said, there might have been something coming up somewhere, but doesn't it happen fairly frequently anyway? I mean, financial institutions could be anyone from, JP Morgan Chase and Citibank and Citigroup to a local mom and pop savings not savings and loan, but at least a local bank somewhere in a small podunk town.
Yeah, one of the questions is, who exactly would be charged under this? Is it going to be like a native, traditional financial institution? Is this referring to some crypto entity, like a crypto exchange or something? That's one of the questions that would need to be answered to begin with.
But it was in all, the tweets are in all cap though, so that clearly was the truth, right? I mean,
obviously all caps tweeting is reliable. If it's all caps, it must be accurate.
Hey, we ran a country 4 years like that. Why not?
Nick, I feel like what this shows is just how jittery the market is about U.S. regulations. I mean, it seems like, what are the real regulatory risks to look out for?
Yeah, so there is definitely a lot of, I'd say confusion is one of the words that is applicable right now. So on the Fox Business Report, one of the things that was said is that Gary Gensler is likely to continue regulation via enforcement rather than rulemaking. And the industry is looking forward to rulemaking. That's what they're really hoping for, is that the SEC will come out and say, here's some guidance, here's some specifics on, what you can do to raise funds without violating securities laws. And, to be fair, there is the argument that existing regulations are sufficient, but the industry, they say they want, more specificity. They want more, if not bright lines guidance, at least they want to know, broad strokes, what they can do, beyond just talking to the SEC's Innovation Hub. Regulation by enforcement has been decried under the former SEC chairman, Jay Clayton. And if that's really what's going to happen over the next, term, I imagine it's going to be decried, moving forward.
All right, Nick, thanks for the update and joining us this morning.
Thank you.
All right, that was CoinDesk Managing Editor of Global Policy and Regulation, Nick Day. Don't forget to sign up for the State of Crypto newsletter on CoinDesk.com. And our first guest founded a trade group that advocates for blockchain innovation in Washington, D.C. She also teaches the subject at Georgetown University and is a former congressional staff member as well as journalist at RT and Forbes. Joining us now is Perianne Boring, founder and president of the Chamber of Digital Commerce. Welcome, Perianne.
Thank you. Good morning.
Good morning. All right, maybe you could comment on some of these rumors that Nick had talked about, that there's some sort of rumblings about regulators cracking down on Bitcoin, for money laundering concerns. And we did also hear from the Wall Street Journal editorial board writing a column over the weekend saying that there's a lot of confusion about cryptocurrency coming from the SEC. Regulators may be harming investors by filing suits before setting clear rules, referring to their investigation to Ripple selling illegal securities.
Yeah, so first let's just start with Treasury and FinCEN around the anti-money laundering laws. So first and foremost, I can't corroborate the rumors. However, what is FinCEN? FinCEN is they're an enforcement agency. So their job is to enforce the Bank Secrecy Act and the anti-money laundering statutes. So that is what they do. That's what they're organized to do. So there will be enforcement actions. There has been enforcement actions, and it wouldn't be surprising to see enforcement actions regarding cryptocurrency going forward. I hope not. I mean, I hope everybody's following the rules, and I don't want to see criminal activity on the blockchain. But the reality is that there is. And law enforcement, they have a job to do, and our space is moving and growing very fastly. And that absolutely is possible. FinCEN has also been incredibly active in the cryptocurrency industry very recently. We do know that they are hiring a number of new employees and experts regarding cryptocurrency. So they're increasing their efforts in this space. But they also have a couple of new laws that have not gone into implementation yet. There were 2 NPRMs. One just closed earlier this year. That was that self-hosted, self-managed wallet issue. And then also the travel rule NPRM, which closed late last year. So there are new statutes that are still being, comments have been considered, and we haven't seen the final rule go into implementation yet.
So good morning. So I just asked Nick a similar question, but I'm curious about your take. I think this shows how jittery the market is about U.S. regulation. What are the real regulations that we actually need to be looking out for that could cause an impact on the price? So we saw that this was more in the rumor category, but where are the actual regulatory risks?
Well, I do think these anti-money laundering statutes are a huge risk. They're very comprehensive, and there's a lot of changes underway in terms of these laws. Again, there's 2 open rulemakings today, so we're seeing massive changes, especially with the implementation of the travel rule, which is going to apply internationally. So AML laws are a huge risk. Tax is a big one as well. We're now seeing new John Doe summons to very large institutions in this space. So in terms of compliance with tax, it's a big challenge. And the major issue there is that there are a lot of areas where we don't have clarity on record keeping and reporting requirements regarding tax. So I think there's a lot of risk and uncertainty there. And then you've already mentioned the SEC. Nick had said that there's kind of 2 sides of that conversation, where there are some people who do feel like we have clarity from the SEC. I don't think that's a very fair statement to make. I don't think there are clear rules to the road at all with the SEC in terms of what is inside their jurisdiction and what's not inside their jurisdiction. And there's going to be probably a lot of new developments there with their chairman just being confirmed last week.
Perianne, what does the digital chamber actually do? Can you explain to the folks at home? And also, how many of these industry groups do we need? It seems like it's so decentralized and distributed when it comes to industry groups. So let's go.
That's a nice way of putting it, for sure. So the Chamber of Digital Commerce, we were the first ever trade association for the blockchain industry to be incorporated. We're based in Washington, D.C. We're also the largest trade association representing companies in the blockchain space. We have over 220 member companies today. We have 3 verticals to our platform. The first is policy and advocacy. So we're very active across pretty much all areas of the legal landscape, impacting digital assets and blockchain technology. We've talked about a few of those already today. We're also a very large network. We're turning 7 years old this summer. We have a very large network. We're one of the largest networks in this space. And a big part of what we do is support companies that are building in this ecosystem by creating connections and partnerships. And then our third pillar is education. So one of the biggest challenges to the adoption of digital assets is a lack of education. So we do contribute a large amount of resources to educating audiences from the public policy industry to the business community, as well as the media.
So are you working with the other trade groups as well, or are you all, going separately and hoping that, by attacking at different or, advocating at different angles, you'll have an impact that way?
Yeah, we absolutely coordinate with lots of other people in the public policy space, including some of the other crypto voices. We also work with other more established organizations in industries throughout Washington. Like, Washington is a very small community, and we all know each other very well. While there are a lot of different voices, we have insurmountable issues when it comes to public policy, and we welcome more resources.
I wonder, with Gary Gensler being confirmed as the new SEC chair as well, and you mentioned regulatory unclarity, do you think that Gensler will bring better clarity? Is there any sense of how that will shape in the future? And, SEC Commissioner Hester Peirce has also suggested safe harbor rules for crypto companies who do launch a token or something like that. So are we seeing legislation that will make things clear for blockchain innovation?
I do believe we will get more regulatory certainty under Chairman Gensler's tenure. Gary Gensler, as you all know, was a professor at MIT, and he taught on these courses. Also, formerly was at the CFTC. He is very knowledgeable on digital assets and blockchain technology. And I do think we're going to get the clarity that the industry has been calling for. And I think that could cut both ways. One side, some of that clarity could be very welcomed. Other parts of that clarity could not be, which just means the stakes are higher. And it's even more important for us to be at the forefront of shaping what the future of policy and regulation looks like.
All right. Perianne, thank you for joining us this morning and sharing your insights. Appreciate your time.
Yeah, thanks so much.
All right, that was Perianne Boring, founder and president of the Chamber of Digital Commerce. Coming up, checking in with Asia and the crypto markets. Welcome back. Time now for the daily forecast, an update on what's happening in the Asia crypto markets. Here's Angie Lau of Forecast News.
Welcome to the Daily Forecast, April 19th, 2021. I'm Angie Lau, Editor-in-Chief of Forecast News. Let's get you up to speed from Asia to the world. Well, Beijing seems to be softening its stance on blockchain-based digital assets after its 2017 ban on virtual currency trading. Li Bo, the deputy governor of China's central bank, this is the PBOC, of course, he said he believes crypto assets will play a major role in China as an alternative investment tool, and doesn't consider them currencies that compete with China's digital yuan. He spoke yesterday during the Bao Forum for Asia, an annual conference seen by some as China's answer to the annual World Economic Forum. Now, stable coins were also in focus, examples like Tether and Paxos. Li said that if they have ambitions to become widely used payment tools, well, they will be subject to even stronger regulation in China than Bitcoin. Reaction from the Chinese public on social media platform Weibo has mostly been positive. Many users interpreting the news as a hopeful development for cryptocurrencies. Asia's top economy may have a place for crypto, after all. All right, let's take a look at spot prices on Bitcoin, topped out at around the $57,000 mark at 4 p.m. local Hong Kong time. It's a 1.5% increase from the same time yesterday. And taking a look at the top 10 in crypto, and an upbeat mood has swung around to end the drop-off we saw over the weekend. The weekend dip happened as the market was cooling down after overheating from last week's Coinbase NASDAQ listing. Investors cracked after Coinbase underperformed to expectations of some, while stakeholders sold about $5 billion in shares. This included about $300 million from CEO Brian Armstrong alone, accompanied by a drop in hash rate from the Xinjiang blackout, where did it lead us? Well, 9.2 billion Bitcoin longs liquidated. But many exchanges in Asia here have recovered. Some, like Hong Kong-based AAX, recorded double the volume of long positions placed on Bitcoin.
We are seeing like a lot of pending approvals of fiat deposit today. So people are actually having taking cash, wanting to get in and buy Bitcoin. The volume today is actually around 1.5 times of our average fiat deposit.
Dogecoin bucked the trend throughout the sell-off. In fact, while other coins were suffering, its market cap grew to well over $40 billion. Now, if it were a publicly traded company, Dogecoin is now worth more than eBay. Taking a look at Asian equity markets for you today, all indices were up amid optimism on global economic recovery from the pandemic. And finally, looking ahead, tomorrow is the deadline for the Financial Action Task Force, the global money laundering and terrorist financing watchdog, to take suggestions for its draft guidance on virtual assets. We've seen South Korea and Japan wrestle with uncertainty over crypto markets, especially about money laundering, and the FATF guidance frames how regulators implement crypto laws locally. Now, they've added DeFi and stablecoins to their current draft, but industry experts say more clarity is needed. Grace Chong from the Association of Cryptocurrency and Blockchain Enterprises and Startups Singapore has been coordinating the industry's response in that country.
A lot of the growing DeFi framework is actually based in Asia. So as a result, I think quite a lot of the entities would be quite concerned about the recommendations in relation to DeFi, as well as some of the comments by FATF that services should be denied to unhosted wallets if the relevant recommendations cannot be implemented.
FATF is expected to make further amendments at its upcoming June meeting. And that's our daily forecast from our vantage point right here in Asia. I'm Forecast Editor-in-Chief Angie Lau. Until the next time.
The Crypto Markets Update is presented by Grayscale, the world's largest digital currency asset manager.
All right, checking in on Bitcoin right now. Bitcoin is up about $56,360 right now, up 2.3%. And the ETX Ether price right now trading over $2,200. ETH is up about 4.5% according to trade block data. And joining us now to discuss the crypto markets is Peter Hans, Director of Investor Relations and Business Development at asset management firm Arca. Welcome, Peter.
Thanks for having me.
All right, maybe you could give us a breakdown of what you believe is behind this Bitcoin pullback. We're hearing many rumors, the China hash rate going down, as well as the regulatory, a possible clampdown in the United States. What are your thoughts?
Well, I think it's been pretty well covered thus far in terms of a lot of the speculation that we saw on social media. In terms of the regulatory environment, I think, also that is largely to be expected. And I think we've seen, some of the bounce back already showing that this is, I don't want to say largely overdone, but certainly to the magnitude, it seems to be, a little bit overdone. And that's a lot of the volatility that you see in markets that are really nascent and highly inefficient, which, at least for the foreseeable future, I think we'll continue to see.
Peter, about that inefficiency, how much of a concern are the thin markets? Is the lack of liquidity in the markets for an institutional investor? Has this recent downturn or this recent sell-off or worried investors, institutional investors, about how they step into the Bitcoin pool?
Yeah, it's an interesting question. I think I would separate liquidity from inefficiency, because there actually is a fair amount of liquidity in a lot of assets, even kind of smaller cap assets. And inefficiencies, I think, for more astute investors, they realize that does create opportunity. And sometimes when markets do get ahead of themselves and see a lot of upside beta, it's nice to have a bit of a healthy reset. And historically, as we think about being fiduciaries and longer term capital managers, healthy resets often present a lot of opportunity going forward. So I think a lot of times institutional investors, they of course don't want to miss bull runs, but at the same time, being in traditional markets, we're used to mean reversion. And I do think that this market is a little too young for mean reversion. That said, pullbacks are often great entry points when you believe in a longer-term secular tailwind.
Good morning. So it was a little hard to make sense of what happened this weekend, but it did draw attention to the risk factor, which is China, and the fact that there is a lot of mining happening in China. How big a risk factor is that, or is this something that is just kind of overblown?
It's really tough to say. I mean, I think it's just kind of the nature of the market, frankly. And if we're talking about Bitcoin specifically, I think one thing to really keep in mind, and one thing that we really tend to focus on, is that the entire digital asset class is far larger than Bitcoin and continuing to move in that direction, and also serving very different purposes. So as we look at blockchain as the underlying technology, and a technology that can, I think, really permeate all aspects of our digital economy, we have to think as an asset class as well beyond just Bitcoin and hash rates and where miners are coming from and energy consumption. This is a much larger story in terms of a real technological advancement that can be used for, frankly, many different purposes. And we're starting to see that play out over the last 12 months and create.
With Bitcoin, where do we go from here?
Well, also very tough to say, but I see no reason that we wouldn't go higher, frankly. From an institutional aspect, there's still far more money on the sidelines than there is in the asset class and in Bitcoin. So, and I think it's only a matter of time before, institutional capital writ large moves into the asset class.
Peter, we've seen the rise of the alts in the past few weeks. Particularly, what other besides Bitcoin and Ether are you guys looking at?
So we don't really use the term alts because, frankly, it implies that these are alternatives to Bitcoin. And the most of the space that we look at when you talk about, DeFi, NFT infrastructure, there's tokens involved in gaming and in sports and fan engagement. These are not alternatives to Bitcoin, frankly. So we predominantly look at real business applications that have real user bases, revenue, and they have a token favorites somewhere on the capital structure.
Any favorites?
A couple that we've been looking at lately that I think are really interesting that have had news have been Chili's, Axie Infinity, are a couple of pretty interesting ones.
All right, Peter, thanks for joining. Not Doge, yeah.
No, unfortunately, I'll stay on the sidelines with that one. But thank you.
All right, Peter, thank you for joining us this morning and giving us your analysis and update on the crypto markets.
Thanks for having me. I appreciate it. Take care.
Right, that was Peter Hans of Arca. Coming up, a New York Times writer who sold an article as a non-fungible token for over $500,000.
The value proposition of Ether is rooted in a bet on the technology of proof of stake and decentralized application. Ether, the native cryptocurrency of the Ethereum blockchain, represents a long-term bet on POS becoming the most trusted and used protocol for securing public blockchains in the world. Without the same energy consumption pitfalls as Bitcoin, it may boast higher levels of decentralization, security, and efficiency.
The CoinDesk Spotlight is brought to you by Nexo, the place to earn on Bitcoin, Ethereum, and more.
Welcome back. Our next guest made history selling a New York Times column as an NFT, the first of its kind in the storied paper's 170-year run for 350 ETH, which was over $500,000 at the time, but is now worth almost $800,000. Joining us now is New York Times technology columnist Kevin Roose. Welcome, Kevin.
Thank you for having me.
Great to have you. All right off the bat. So why did you make an NFT and why did someone spend over $500,000 on a picture of your column?
Well, you'll have to ask them for the second part. But the reason I did this was I was curious about just the entire NFT ecosystem. I wanted to sort of learn by doing. And so I decided to write an article sort of explaining NFTs to, the New York Times readership. And then I actually turned that article into an NFT and just said, what the heck, let's see how this goes. And I listed it for half an ETH and was sort of nervous that I wouldn't even make that much. And woke up one morning and there had been a huge bidding war, and we eventually got to 350 ETH, which blew my mind and pretty much everyone else's that I talked to at the New York Times.
Welcome to the crazy crypto world. So I'm curious about the process of making an NFT. It's generally, everyone's like, oh, it's so easy, anyone can do it. But is that actually true? When you were actually making the NFT, were you able to do it completely by yourself? Did anybody help you? Did you run into any obstacles?
Yeah, from a technical perspective, it's extremely easy. I used Foundation, which is one of the big NFT platforms, and they've made it basically a sort of one-click process. I mean, there's two steps. There's a minting and then a listing, and you have to pay a gas fee for each of those steps. But the hardest part was actually explaining to my bosses what I was doing and getting permission from the lawyers and everyone else to do this. They had a lot of questions, as you can imagine.
Yeah, I'm sure.
Kevin.
And this sort of brings me to my next question, just about the New York Times in general and their attitude towards crypto. So I'm sure you've seen there's been some recent drama in crypto Twitter about a column about the about energy and Bitcoin and how Bitcoin is not good for the environment. But there's sort of this these larger rumblings in the crypto world that says the New York Times is anti-crypto, or the New York Times is anti-Bitcoin, or they publish negative articles. I'm just curious, if you've seen that kind of commentary and how you respond to it.
Yeah, I don't really buy it. I mean, we were one of the first outlets we published Mark Andreessen's, article explaining Bitcoin way back in, 2013 or so. So it's not like we've only published negative articles on crypto. I do think we try to cover it objectively. And, that means looking at the downsides as, including the environmental impact as well as the upsides.
So, Kevin, how much of your new book, Future Proof, and by the way, you're also selling the cover of Future Proof you've made NFTs, about 5 NFTs of that. First of all, how is that going? And second of all, how much of your book, Future Proof, discusses crypto, and what's your take in general there?
Yeah, so we just sold the NFT for my book for sadly not 350 ETH. This was about 4.4 ETH, so not as lucrative, but definitely fun. I love experimenting in crypto, and I've gone through my own evolution on crypto. I was very bearish on it at the beginning, when it first got popularized. I then sort of learned some more, talked to some people in the space, learned about the sort of wider applications of blockchain. So I think, I'm cautiously, optimistic about it. I think that, the potential for especially artists and creatives and other people to sort of, monetize their art through NFTs is really exciting. I think a lot of it is obviously, speculation, and there's no way that my newspaper column is objectively worth $700,000. So I think there's some froth in the market. There's obviously some people who are behaving irrationally, but I do think the underlying technology is really interesting.
Yeah,
so speaking of. Speaking of people getting into crypto, of course, there was Facebook's foray into crypto with Libra, DM, whatever they're calling it right now. How has it been perceived by non-crypto technology people like the Googles of the world, et cetera, and also the columnists and people who generally don't cover crypto? How do they see Facebook getting involved in? And also, what happened? What's really going wrong there?
I don't think I've ever heard anyone talk about Facebook's foray into crypto, except for tech reporters and people who work at Facebook. I mean, to be totally candid, I just don't think it's penetrated sort of mainstream consciousness. And I think, people are very skeptical of Facebook. Their reputation has taken a beating over the past few years. And so I think there's going to be a lot of hesitation to trust them with money, with people's, investments, with transactions. I think even if they do say, this is separate, this is not a Facebook project, we just sort of helped get the ecosystem up and running, I think people are going to be very skeptical when that hits the market.
In your column, Kevin, you note that the buyer of your NFT, the 350 ETH worth NFT, that they were pseudonymous and they were starting to amass a collection of historical NFTs. But you also note that NFT ownership itself is somewhat precarious. The tokens can turn into broken links at the marketplaces, and hosting services that store the underlying files disappear. So I'm just curious about your take on the NFT space in general.
Yeah, I think that piece of it is worrisome to me. I mean, people are paying, in some cases, hundreds of thousands or even millions of dollars for what are essentially, sort of securitized links to, the files themselves are not actually hosted on the blockchain. In my case, they're hosted on IPFS, which is sort of a decentralized hosting service. And if IPFS, ever ceases to exist, or if Foundation ceases to exist, whoever bought these NFTs will have some trouble sort of claiming and preserving them. And so I think that's something that needs a solution. It can't be that people are spending millions of dollars on NFTs and only for them to sort of 404.
Mm-hmm. Kevin, very fascinating. Thanks for joining us on the show and walking us through the process, and congratulations on your NFTs.
Thanks a lot. Thanks for having me.
All right, that was New York Times technology columnist Kevin Roose. And that's it for First Mover. Coming up tomorrow is special guest, Binance CEO CZ Changpeng Zhao. Thank you, Emily Parker, our CoinDesk Managing Director of International Content, as well as Lawrence Lewitinn, Managing Editor of Global Capital Markets. I'm your host, Christine Lee. I'll be live at 3 p.m. with All About Bitcoin. Coming up at noon is The Hash. You're watching CoinDesk TV.